Hello and welcome to the Libinance podcast, where history, current trends, and smart investments collide for an exhilarating ride. We'd love to hear from you on what you think, and do follow us on all our social media accounts and leave your feedback as always. I'm Lois Boy, you can call me Libby, and I will be your host for the podcast. For each episode, we embark on a journey through time, explore deep hidden financial histories. From there, we dissect the pulse of today's financial world, breaking down complex trends. But that's not all. We talk about practical investment strategies to empower you on your financial journey. Hi guys, what's poppin'? You're welcome back to the Libinance podcast, where we believe the world of finance is for everyone to know. Now, I know last week I took you guys by surprise, but guess what? Today is the grand finale, the final discussion on venture capital in Africa with Mr. Miracle. In this episode, he talks about the unique challenges faced in the VC African space. He also talks about some opportunities out there in the VC space, and also gives us advice on how to transition if you're looking to transition into the venture capital space. He gives you that advice. So I'm not going to bother you so much. So let's get back to the discussion. So to give you a bit of context, we ended last week's episode with Mr. Miracle explaining to us how VC in Africa is different, not in terms of the structure, but in terms of outcomes. When certain things are being applied, the outcomes are quite different when it comes to venture capital in Africa. So let's just rewind a little bit to just give you that context. Then we move on from there.
Now you find out that the business model that works in Nigeria could fail woefully when it gets to Ghana, or we fail woefully when it gets to Kenya, right? And you now find that many of these startups are not able to expand into certain regions. So that sort of high growth within a short period of time that VCs are looking at, that forms the Silicon Valley standard, is not the case. That sort of outcome is not the case with regards to Africa. So that means that VCs are now more adjusting their expectations in terms of what are the certain growth milestones that a seed stage startup should be able to see. What are the growth milestones that a Series A startup will be able to see? What are the growth milestones that a Series C startup should be able to see? And with these timelines extending more and more, you find out that the typical structure of having a VC fund lasts for 10 years is now being questioned. Whether do we now need to have a model in Africa whereby it's not the standard 10 years, but we are looking at, let's say, a 15-year timeline to allow the startup enough leeway to grow. Or we are now looking at what we call an evergreen fund. An evergreen fund is a kind of fund that doesn't have, let's say, a timeline of closure. It's one that invests capital once there is an investment opportunity. So it doesn't have a start. It doesn't have a start and an end time, right? So that's pretty much the idea of an evergreen fund. And then the last part now is in terms of growth. In terms of exit. Now, this is usually affected by, firstly, the aspect of the capital markets, right? The underperforming capital markets, like we mentioned. So there are three pathways for VCs to exit their investment. There is the mergers and acquisition, there is the IPOs, that's the initial public offering, and then there is the secondary. Now you see that IPOs is it's almost as little as non-existent, because although there have been a few IPOs in Africa, but it's incredibly hard because of underperforming capital markets in Africa. Like I mentioned, I think there's just one particular success story of an African startup that listed in Africa. That's FMVA, which listed on the Egyptian stock market in 2019, and was able to gain unicorn status post listing on the Egyptian stock market. So you see that sort of underperforming capital markets limits the sort of exit opportunities. Then the second aspect is also in terms of mergers and acquisition as well, that a lot of times that sort of high valued acquisitions that get the interest of VCs that VCs are looking at, are mostly driven by large companies that are looking to acquire startups that has some sort of strategic importance to them, either in terms of the technology that and the technical talent they are going to have access to. Secondly, in terms of, let's say, their market access. Now we see that in terms of in that aspect, there are certain startups that are not living up to par in that area. So it's not affecting the sort of exits that we are seeing in startups. And that is also affecting the practice of VC, that we are now looking at, okay, what other aspects of exit can we leverage? So you see more VCs are now looking at, okay, how can we engineer secondary exit, since mergers are fewer and IPOs are really tough, right? And then also looking at and also in terms of that exit, looking at different aspects that they can use to engineer exit as different from the Silicon Valley standard that has been laid down. So to summarize that particular point is that I don't think it's necessarily there is a difference in terms of concept and structures of VC in Silicon Valley versus what it is in Africa. Rather, what I think is that there is a difference in certain outcomes that we see when we apply those concepts, which is affected by the unique environmental situations that we have in Africa. So more and more, we now need to start adjusting our expectations based off on the unique environmental realities that we have.
Okay, yeah, I understand it now. It's not so much about the structure, but more about, say, what you said in terms of growth, the exit opportunity, and the capacity. I think you actually answered one of the questions I wanted you to talk about, which was that in your book, you mentioned the unique challenges in the African VC space. So I wanted you to talk about the challenges that could impact investors and then entrepreneurs as well. You made us know about the logistics as well and the capacity and all those stuff. But if you would want to elaborate on that more, that would be great.
Yeah. Okay, so maybe one thing I may just I would just want to add in terms of the challenges, right? Just in addition to other points that I've made. Now, remember, I recall I said something about a bulk of the investors that we have are foreign investors, that we have fewer local investors involved in the space, right?
Yeah.
And the implication of that is when certain outcomes, right? So, for instance, post COVID-19, foreign investors were very, very bullish on Africa, right? Because around that time, we saw a lot of success stories, like a lot of funding started coming into Africa. On exit, Paystack exited within 5 years at $200 million. So that really raised a lot of expectations and hope in the performance of Africa, right? Mm-hmm. And everybody knows that people say that Africa is going to be the next big thing when it comes to investment. So people are now foreign investors are trying to take position for that opportunity. Mm. But then post-COVID and then 2022, when we had all the recession and then there was a funding crunch, certain performance were not met. Certain performance expectations were not met. Many African startups were struggling to move from, let's say, a seed stage to Series A, or many of them started shutting down. Now, that kind of that caused some sort of fears with regards to foreign investors, and some of them had to pull back from Africa. That led to, let's say, the crash in terms of total funds raised in Africa. So, but what we see is that when we have more local investors, they have better understanding of the unique Africa context that we have. They have on the ground exposure about how Africa works. So they are more inclined to exercise that patience on their investments rather than, let's say, foreign investors, right? So part of the unique challenges that VC fund managers are now facing is, okay, in the face of capital crunch from foreign guys, how are we able to get the local investors to get involved? And to me, that has been part of my goals recently, in terms of the whole educational aspect of putting information out there that educates local investors on the potential of the asset class, so that they are more open, they are more inclined to want to invest, right? So those are some of the unique challenges that are facing VCs. How can we be able to get more local investors to come on board, right? Then, if I'm also going to add to that, is also the unclear regulatory landscape when it comes to VC operations, when it comes to startup operations within within Africa, right? And that is also impacting certain things like what we call fund domiciliation. That many times certain funds are not domiciled in let's say in the country where they're established, but they are domiciled in another region whereby there is a better regulatory transparency, right? So those unclarity when it comes to Africa really affects the operations of VC.
I think I have a few more questions. So the next question that I have, I would want to know, right, as an aspiring individual wanting to enter into the venture capital space, and for aspiring professionals wanting to move into the venture capital space, what opportunities are there in the venture capital industry, and entrepreneurs
Okay.
funding?
Okay, makes a lot of sense, right? So ideally, when I look at venture capital, I think the opportunities are boundless, but I would put them in three buckets, right? So one aspect is in terms of this from the startup angle. So startup angle in terms of access to an alternative access to capital, and then also job creation on that end. That when we are able to have startups, right, that raise capital, in order to fund growth, one thing that they do is to recruit talent, right? So you see that professionals can be able to get into, let's say, a professional that is very involved in working in a big company can work with startups. So it has created opportunities, job opportunities on that front. That's one. And then the second aspect is in terms of job opportunities working in a venture capital firm, right? That, let's say, 10 years ago, you hardly find people starting out their careers in venture capital, or you hardly see somebody, oh, I want to move away from investment banking to come and work in venture capital, right? To come and work in venture capital, but that is what we are now seeing in the space. So, for instance, I transitioned from management consulting into venture capital. So, there is opportunity for people to work within a venture capital firm. And then, contrary to what people think, that it's only maybe you have a finance background, but that critical aspect of portfolio management to startups creates a boundless opportunities for people to work within VC, but within an aspect we call portfolio value creation, or some people will call it platforms. And for portfolio value creation professionals, it's all about leveraging their expertise to support startup. Let's say you worked in a fintech company and you have, like, or let me not use fintech. Let's say you worked in a health tech company and you have good knowledge of healthcare operations. If you find yourself in a VC, you can find yourself in a VC that invests into healthcare companies. So they recruit you to use your expertise, your experience to support those healthcare startups there, right? And then the third aspect of opportunities in terms of investment opportunities as well, that seasoned professionals, let's say you had an investment banking career, or you had, let's say, private equity career, that there's an opportunity for you to act as a fund manager, right? If you know limited partners, you're able to raise funds that you can now invest. And then from the aspect of the limited partners as well, it also provides them with kind of an alternative investment class, right? That many of them are more inclined to invest in bonds, invest into equities, right? But alternative investment asset classes like this is as a way of diversifying investment and building better portfolio resilience. So funding opportunities for startups, and job creation opportunities for the startups, the employees that work with the startup is one opportunity. Then opportunities working within a VC firm, whether it's a VC analyst, VC associate, venture partner, portfolio value creator, it's there for you. And then the aspect of alternative investment opportunities for investors, and those are some of the opportunities that I see in the space.
Endless opportunities there are in. I think venture capital tries to kill two birds, or more than two birds, because it's in the entrepreneur side, they are recruiting. When you come to the venture capital side too, there's more opportunities there as well. For individual like me, I think in third year or so, I wanted to enter into the venture capital space. And since then, I've been looking everywhere, listening to videos and taking online courses in venture capital and how it works. And I'm just a confused human being, actually, just trying to look at how it works and thinking about what to do and everything. So My question is, what advice would you give to professionals and individuals looking to enter into this career? What skills or knowledge are essential for success?
So, to be honest, to be quite frank, venture capital is not one that is entry level friendly, right? That a lot of times you will see for investment analyst role, which is like the very base, that you would need to have like 3 to 5 years of work experience before transitioning to venture capital. I already had like 3 years of management consulting experience. So reason being that you are coming on board to not just review investment opportunities but also support this startup. So you need to have some level of experience, you need to have some level of expertise in order to support these startups, right? So I think that for anyone looking at coming into venture capital, right, one of the first steps that one needs to take is that you need to be bringing something to the table, right? Bringing something to the table is that, let's say you already have some sort of work experience working in adjacent industries, like maybe private equity, investment banking, or management consulting, right? You may want to start there. And then, let's say 3 years in, you can then transition into venture capital. But then that's not to say that there are not opportunities for people to start their careers in terms of entry level venture capital. So we are now seeing some more startups, venture capital firms run some sort of internship or certain graduate program. Like HealthCap Africa has this sort of graduate analyst program that they do every year, out of which they pick some of the best performing to become investment analysts in the firm. And Patek, for instance, Patek runs internship, Lockheed Inc. runs internship. So for those people that are looking at becoming entry level, then following the pathway of looking out for internship there is very much important. But then still on, what do you bring to the table? One thing startup events, this is a big one, is deal sourcing. Do they have access to quality deals? So in your local community, if you know entrepreneurs that are building amazing projects that VCs can be interested in, so that's the value add for you, that you can put together these things and you can connect with, let's say, fund manager. Oh, I have this number of these. I would like you to look at them. So that way, the person knows that you understand one critical aspect of your function, which is deal sourcing. Your key aspect as an investment analyst is sourcing deals. Right. So if you start doing that earlier, even before you join a VC firm, it gives an indication that you know what the business is about and you can be able to function in it. Right. So then the third aspect for more, let's say, established professionals is in terms of working as a venture partner. So a venture partner is not like a staff of a venture firm, but somebody that works from, let's say, an arm's length, using their expertise or their network to support the VC's activities, maybe in terms of deal sourcing or providing their insights when it comes to due diligence. So that sort of venture partner kind of relationship can allow you be exposed into the space before you eventually come in, right? So these are some of my advice, but ultimately I think being clear about the value, what it is that you are bringing to the table, right, is very, very critical, that you need to really understand for you to succeed in space.
I think this makes me calm. I think I now know how to go about things. Yeah, thank you very much for that. And I think
my pleasure.
My listeners are actually fulfilled. We would love to have more of this. I mean, it's very short, but then very deep, very good insight. So my listeners are quite curious and they want to know, how can they continue the conversation with you and learn more about venture capital and your work?
Okay, I think the first way is that you get the book, right? Because a lot of everything I've learned, I have poured it into that book. And like I said, the title is 365 Days in Venture Capital, a guide to the business of the subtitle is a guide to the business of venture capital in Africa. So part of what we are going to be doing is, those that get the book become a part of the 365 days community, right? And that community is to stay in touch with the audience, so that I'm able to host, let's say, Q&A webinars to clarify certain questions and have book review sessions, right? Just to drive certain points home, because there's a lot to talk about in VC, which, let's say, the book, which is about 250 pages, is not it cannot contain every single thing, right? So those sort of community activities can help us keep in touch. But then my social media handles, I'm very, very active on LinkedIn. So Miracle Nnaji on LinkedIn. So I have a range of posts that I'm going to be making. Starting, I've started making them already. So it's one way to interact with me. And obviously, if you send a DM and if you send a direct message, I'll be able to respond. And then also, I'm active on Twitter as well. That's X. So Miracle Nnaji as well. So we can connect on X. We can connect on Instagram as well. Kene_Nnaji. But you can just search Miracle Nnaji on Instagram. So those are the three platforms that are most active.
Okay, looking forward to that. When are we expecting your book launch? So that we see how to get on it.
Yeah, definitely. So just keep a tab on my social media handles. So the pre-order launch is starting on Friday. So we are making the first announcement in terms of pre-order on Friday. Then the actual book launch itself is 14th of September. So you can take advantage of the pre-order discount, which is about 30% on the price. So the pre-order discount is going to last from Friday, which is what's Friday's date again? That's 19th.
Okay.
So from the 19th of July to 1st of September, that's when the pre-order window is going to be available. But then you actually having the book delivered to your doorstep, and the book launch event is going to be happening on the 14th of September. But before that, keep tabs on my social media handles. I'll be posting a lot of insights about the book and all you just need to know.
All right. Thank you for that. It was lovely having you, Mr. Miracle, on the podcast.
My pleasure.
You've given us more than we could ever ask for, and we're willing to really have you on the podcast another time. Thank you very much.
Awesome. It's been my pleasure. Thank you so much. All the best.
All right. Thank you. All right, that's it for today's episode, guys. I hope you enjoyed it and I hope you learned so much. See you next week, same time, same channel. And remember, the world of finance is for everyone to know. Adios. Bye-bye. Thank you for listening to the Libinans podcast. We'd love to hear from you on what you think, and do follow us on all our social media accounts and leave your feedback as always.